Are you ready for Making Tax Digital for income tax and self-assessment? I'm Jack Rivas, a qualified accountant, here to talk about Making Tax Digital for income tax and self-assessment, also known as MTD ITSA. It's a big change coming from HMRC that's going to affect millions of sole traders and landlords. So if you earn income outside PAYE, this one's for you. So let me break this down simply, clearly, and with no jargon. Making Tax Digital for income tax and self-assessment is part of the UK government's Making Tax Digital initiative. It's HMRC's way of moving the self-assessment system online to provide them with real-time information to help with their budgeting and to help reduce inputting mistakes from taxpayers. At the moment, most people who are self-employed or have rental income file a single tax return once a year. But under MTD ITSA, you need to keep digital records, use MTD-compatible software, and send quarterly updates of your income and expenses to HMRC. Then at the end of the tax year, you'll submit a final declaration to confirm your final tax position. The quarterly updates aren't quite like mini tax returns. Instead, you'll just need to report the total of each category of income and expenses for that quarter. The final declaration then acts as a normal tax return. It adds up all the info from the quarterly updates and will let you include your income from other sources and any adjustments before sending it off to HMRC. It's important to note that MTD will not change the due dates for paying tax or filing the tax return. However, the quarterly updates will be given a submission deadline of 1 month and 7 days following the end of the reporting period. So who needs to worry about this? From April 2026, MTD applies to sole traders and landlords with a total business and or property income over £50,000. It's important to note that we're talking about turnover here and not profit. Basically, it's how much you receive in income before taking any expenses into account. From April 2027, it will expand to those earning over £30,000. And lastly, those earning over £20,000 will have to comply with MTD from 2028. If your total income from self-employment or rental income or a combination of the two is under £20,000, you're safe for now. But it's likely HMRC will include you in MTD in the future. To decide if Making Tax Digital applies to you, HMRC will use your most recent tax return submission. So if your 2025 tax return shows earnings above the £50,000 threshold, you will have to join MTD ITSA from April 2026. You will not be registered automatically by HMRC, so this is something you must sign up for. If you have an accountant, they may do this for you. To get ready for MTD ITSA, you firstly need to choose MTD compliance software, as HMRC will not be providing an online filing service under MTD. We recommend using QuickBooks as it's simple to use and has all the features you and your accountant will need to file the quarterly updates and the final declaration. If you're not sure on which software to use, make sure to ask your accountant, as they might have a preferred software and they may also be able to offer you a subscription that's cheaper than purchasing directly from the company. You also need to start keeping digital records. For example, QuickBooks has a built-in receipt capture feature that allows you to upload pictures of your receipts directly to the software. No more notebooks and shoeboxes full of receipts. Lastly, you need to understand quarterly updates. If you're completing them yourself, you need to really understand the process. If your accountant will complete this for you, You just need to understand your responsibilities. It's like doing 5 tax returns a year, but don't panic. I'll explain why it's not as bad as it sounds. Yes, at first it might feel like more admin, but with the right software and support from your accountant, quarterly updates become much more manageable. Most software have tools that help you to streamline the process by importing bank transactions and organising your data, but they still rely on you and your accountant to review and amend the figures. It's more about doing your accounts little and often, rather than facing the massive last-minute scramble in January. And there is a silver lining. You will get a much clearer view of your tax bill throughout the year. No more nasty surprises come January 31st. Now here's something a lot of people don't realise under MTD for ITSA. You can actually appoint more than one agent to help manage your tax reporting. So if you already have a bookkeeper, they can handle the quarterly updates for you, entering your transactions, organising your expenses, and submitting those updates every 3 months. Alternatively, you can do all this for yourself or ask your accountant to. Then your accountant can come in at the end of the year and take care of the final declaration. That's where we make the tax adjustments, ensure everything adds up, and submit it to HMRC. So you're not alone in this. You can share the workload and stay compliant without taking it all on yourself. Just make sure you're using software that allows access for multiple agents. If you have income from multiple properties or you're both a landlord and a sole trader, MTD ITSA still applies. Additionally, a separate quarterly update will be needed for each trade or property business. So for example, if you're a sole trader that also rents out a property, you would actually need to submit 8 quarterly submissions per year, 4 per income. Regarding the thresholds, they apply to your total income, not your income per source. So if you only get £10,000 in rental income and £40,000 through your self-employment, you will still be affected by the £50,000 threshold, even though the individual sources are under. If this is the case for you, it's really important to get software that can handle all your sources of income. Let's tackle a few quick FAQs. What if I already use software? Great, check if it's MTD compatible. If it is, you're ahead of the game. Do I still need an accountant? 100% yes. MTD changes how you report, not what you owe. Tax advice, planning, and final checks still matter. What if I don't comply? HMRC will introduce penalties for non-compliance, so don't leave this to the last minute. That's a wrap on MTD for ITSA. It's coming, and while it might seem like a headache now, it could actually make your life easier in the long run. If you found this video helpful, give the video a thumbs up and subscribe for more small business and tax tips. Thanks for watching, and I'll see you in the next one.